So as discussed in my previous video, I have stated that incidence of tax I will be explaining in detail. Here we go. So there are 5 different scenarios where the income can be earned by the individual. It can be a resident or a non-resident, especially companies. And this is even applicable for the individuals also. But the total in the syllabus we are focusing on the companies only. So in the companies there are only 2 scenarios where the companies can be the resident and non-resident. We will be discussing only through the resident and non-resident, but in your material I have given the all the 3 topics like resident and ordinarily resident and non-residents of the incidence of tax in detail. Now let us see the income received or deemed to be received in India, whether earned in India or elsewhere. So if it is the income received in India, deemed to be received in India, then for resident it is taxable, and non-resident also it is taxable because it is received in India. Then even for the non-resident also, if it is received in India, pay the tax in India and leave the country. That is the scenario. So the second one is the income which accrues or arises or deemed to accrue arise in India in the previous year. Then for resident it is taxable, for non-resident also it is taxable. Though he is non-resident, he came to the India, he accrued the income in India and he received the income in India. Then pay the tax in India and leave. That is the concept. And the next one is third one, income which accrues or arises outside India, received outside India, a business control from India. For resident it is taxable, for non-resident it is not taxable. For non-resident, the income which is accrued in India, which is accrues outside India, and income also received outside the India for the non-resident. He has not received the income in India, accrued outside the India and received also outside India. It is not dealt with our country at any scenario, at any cost, so that is not taxable in India. But whereas as it is a Indian company, then it is taxable. The next one is income accrues or arise outside the India and received the outside India in the previous year, any other source. We have different heads of income, but the income received under the head from other source, for the resident it is taxable, for the non-resident it is not taxable. Why? Because he is a non-resident and received the income from the other source outside the India and received the outside the India for the non-resident. So not dealt with our country at any cost, so that it is not taxable. And the last one is not taxable for both the residents and non-residents. Income which is accrues, arises outside India and received in India during the preceding previous year, remitted to India during the previous year. So accrued outside the India and received outside India in the previous year, but remitted to the government of India. It has remitted to the government of India. So you have given all the income which is earned to the Indian government. Then in that case, anyway whatever the income earned total you have remitted to the government of India. In that case, how it is taxable? There is no income for you to be taxed, right? So in that case it is not taxable for both the residents and non-residents. So go through the material I have given in detail, including the resident and ordinarily resident as well, and try to understand it. And if you have any doubt, ping me in the WhatsApp, I will be clarifying you.